Hey everybody, it's Mike, and I wanted to make a quick video here to help you guys understand the process of evaluating your results and figuring out how to cut losses in such a way as to give yourself a chance to make profits. What I've done is I've actually taken the results for one of you who's in the challenge, the Funder Challenge. I've taken your trades that have occurred over a series of days. So here is a summary of those trades. I just copied it. So it starts on the 17th of this month and it goes all the way to the 21st this month. All I did was take the results for one of you and I put them into a spreadsheet. I downloaded that directly from PropReports. You can see here the net results of each trade, right? Now, what I've done is I've run some analysis. I've taken these results and copied them. So basically, I just did this. I selected all of these results right here after consolidating all the data into this one continuous P&L. So I'm not concerned about the overall P&L. I just wanted to see the result of each trade. So I went to the trades summary page on PropReports and I chose the date range, and then I let it list for me all the trades, and I exported that as an Excel file. I uploaded it, and then I edited it so that I can cut out some of the extra stuff and just get down to the nitty gritty, which is the net results of each trade, right? So you can see, like, here's, for example, here is right here an NVIDIA long position where the entry is at 260.06, the exit was at 259.27 with 100 shares, leading to a gross loss of $79 plus fees equals a net loss of $80. So when I go to this page, I've taken the results and I've sorted them from worst trade to best trade. Now, right away, we notice something. The best trade had a gain of $145. The worst trade had a loss of $189.80. Right away, this account, if this were the entire challenge, they would lose because their biggest winning trade is not bigger than their biggest loser. Now, taking the averages, I'm going to go over what the other stuff I did in a second, but taking the averages, here's what we get. The total gains would be $1,261.86. And the total losses, this is net, would be negative $2,758.12. Okay, let me just make this a little bit bigger so you guys can see what I'm doing, okay? I think that's a little too large. There we go. Okay, so here's what I did. I added up all the gains, which I've highlighted in green. So these are the gains here. I've added all of them together, okay? Then I added all the losses together, all these. Notice in the middle where there's zeros, I don't count them. All right, now, so the total losses, that's it. The total gains are that. So that net P&L is negative $1,496.26. Now, keep in mind, this account was trading from March the 17th to March the 21st, which means that whoever's account this is, you're already 50% to your maximum drawdown. So you're already way deep in trouble. This is what I mean by not digging a hole that's too deep. What I didn't show you guys is the summary of each day. For this particular trading account, for most days, they're down $500. They get cut off, right? They're not. So this is an account that truly is not doing well. Here are the numbers. The win-loss ratio is 0.81, right? So that's under 1.2 to 1, so that's not good. Batting average is at 35.66%. That's also not good. But let me show you what will happen. Here's our average gain, average loss. This is based on the total number of winning trades versus the total number of losing trades. These are the averages based on that, which gives us our batting average because I take all the trades combined and I calculate how many of them are winning trades, including the break-even trades. So that's 35.66%. Now, let's go ahead and take a look at some adjustments. So one of the things that I emphasized to you guys in the lectures I give in the morning especially, is that you have to control your downside. That's the only way you become profitable. So what I've done is I'm going to show you something that I've told you guys was true, but I want you to see it for yourself from an actual account. So here is the sum of the losses. Okay, the sum is $1,638.91. That's the total loss that occurred when you add up all of these losses. These are the top 20% of losses. So there are basically about 81 losing trades. I calculated what the top 20 losses were. So in other words, I'm counting whatever is top 20%, which are 16. So I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So the top 16 losses, because this person had 81 losses, I'm calculating the top 20 percentile of losses right there. And these are them. So when I add these up, they total $1,638.91. Now think about that. The top 20% of losses by themselves account for more than the total gains, which means that this is proving right away that the person is not managing their risk well, because their top 20% of losses, literally the top 20% of the losses, ranked, in order, they account for more than all of the gains combined. So what would happen hypothetically if we started cutting the losses shorter? Well, let's go through the rest of the stats. The top 40% of losses adds up to negative $2,322.28. And the top 60% of losses adds up to negative $2,610.31. So notice that there's a bigger gap between these two than there is between these two. And that makes sense, because as you get small to the bottom part of the losses, they get smaller and smaller. Now, more importantly, what would happen if we actually decide to cut our losses off earlier? Now remember, our average gain is $27.43. The average loss is $34.05. So let's check this out. So let's suppose that we start at the threshold that brings us into the top 20 percentile, which is right here. That's a $60 loss. So let's suppose that we actually capped all of these losses to $60, meaning that we never let the trade go more than $60 against us. So if that were the case and we capped it off at negative $60, that means that this loss here becomes negative 60, that loss becomes negative 60, that loss becomes negative 60, and so forth. In other words, we're not letting it go that far. We're not letting it go that far, or that far, or that far, or that far. We're cutting it off at negative 60. Okay. Now, if we did that, all we have to do is do a quick recalculation. We get rid of these losses and replace them with these. Okay. We can't eliminate these altogether, because we wouldn't know that we're going to hit negative 189.80, so we've already hit negative 60. So to do this correctly, we're just capping the losses off. We're not letting them go any further. So if we do that, that ends up being an adjusted P&L. When we add up all of our gains and our readjusted losses, we have a net loss of $817.35, which is way better than the loss of $1,496. So we've seen an improvement simply by cutting the losses faster. Okay, and again, this is on actual trading results. This is something someone actually did. So if this person had cut their losses to $60, they'd be in a much better position. But let's suppose they went further and we actually cut our losses at the top 40%. Now, the top 40% starts after we get to a negative $25 loss. So let's suppose we cut the losses off at negative $25. Now I'm going to add this column here to make my adjustment. So basically what I'm saying is everything that's above $25, we're capping to $25 exactly. So all these losses get cut off. Now that means our adjusted P&L becomes $26.02. You might be wondering, well, I don't see how this would be such a big change. Remember that we're cutting off losses that were larger than $25 in this case, or larger than $60 in that case. So it does actually adjust our P&L pretty sharply. So if we cut out the top 40% of losses, we would now have a positive P&L of 26.02. Okay, so we would still be losing. Our batting average would change, just to be clear about that. This doesn't change our batting average, but it would actually change our win-to-loss ratio, which I have not done the calculations on yet. But our win-to-loss ratio, by necessity, has to improve each time we cut our losses off more quickly. Now, if I go to the next part here, and I look at what would happen if we cut ourselves off at the top 60% of losses, well, here's what that looks like. So our top 60% starts when we get to $12.40, right? So once we cross over that, we start to get into our top 60%. So what I'm going to do is cut off all the losses to $12.40 going up. Boom. So now all these losses over here become $12.40. Now you may be saying, well, how could you only have a $12.40 loss? That's impossible. Well, it's not. You could actually decide to cut your losses off at $12.40. I'm not claiming that all these trades that ended up being winners actually only had the market go against them, only $12.40. I don't know how far the market went against, but I'm just making a simple point. If our average gain is $27.43, all we're doing here is cutting our losses at an equal value of 50% of this. We're just keeping our losses smaller because our average gains are not that big. That's all we're doing. We're willing to cut losses. Will that mean our batting average is going to stay the same? Probably not. It's probably going to get a little smaller. But the point is, it's almost certain that most of the best gains that we see here, most of these gains probably didn't require that big of a drawdown. In other words, most of these gains probably didn't need the market to go too far against us anyway. But let's look at the results. If we cap the losses off at $12.40, we get to positive $518.85, which means that you have a net gain, not a net loss. It's not a big gain, but it is a gain nonetheless compared to a loss. So, in summary, if we can control our downside more effectively, we actually give ourselves room to get some upside. Now, to do this in a more detailed fashion, we would have to analyze each trade and see exactly how far the market went against us to make that win, how far did the stock go against us, the market to get that win, and so forth. So if we can actually track the lowest P&L that we saw to get to this result, the lowest P&L we saw to get to that result, and so forth, that would give us an even better way of analyzing where our cutoff points should be. In other words, we're probably going to find out that most of these gains didn't require as much of a risk as we accepted when we let our trades go that far against us, right? Now, if I wanted to calculate the win-to-loss ratio, what I would have to do is basically do a readjusted version of this. So let's just do it right now so you can see how. So I'll say adjusted total gains, and I'll do adjusted total losses, and I'm just going to put the numbers right over here. Okay, so let's do the first one, adjusted total gains. How would I calculate that? Well, that doesn't actually change because I haven't changed any of the gains, so that's going to equal this. Okay, then I'm going to do so the average gain is going to stay the same. What's going to change is the average loss. Okay, now I know that there are well, let's just do it this way. So I'm going to do this very simple. Well, I'll do that in a second. The adjusted total losses is going to equal the, well, I can actually copy it from here. So the adjusted total losses is going to be this right here. Because what I did to calculate this is I added up the sum of this column here and some of that column there. So all the losses after they've been adjusted. So all I have to do is copy this formula, and I go right here, oops, and I'll just say equals, boom, and now that's my adjusted total loss. Now, how many losses do we have? Well, it says here, we can just do it by average. So I could just say this. If I want to go to figure out what my average new loss would be, I'll just say adjusted adjusted average loss. Okay. And that's going to equal the average of the following of this plus, I don't know if the formula is going to let me do this, but let me find out. This, it may give me an error on the formula in a second, but let me find out. Yeah, it did. Okay, so let me just do it this way. So I'll do average of, let's say, average of sum this might not work, but plus sum. I don't think this is going to work exactly right, but let's find out. Let's see. Yeah, it didn't work. So let's just do this. Sum, let's get rid of the average. Sum this equals, right? Okay. And that's not the average loss, that's the total loss. We'll just divide that. Let me just do this. Let me get rid of this and I'll say this divided by the number of losses. So to figure that out, I'll have to basically just do this. Go here and I'll do a count of these, which I can't do in the formula. Let me just count them now. So I've got 81 losses, it looks like. Yep, 81 losses total. All right, so I'm going to take this number here, divided by 81. Equals this divided by 81. Okay, so now my average loss is $9 and change. I'm going to change the format to financial. Okay, so now my average loss is reduced to $9.17, which means my adjusted win-loss ratio, my batting average doesn't change. My adjusted win-loss ratio is now going to equal the following. It's going to equal that divided by that. Okay, absolute value actually. I should do absolute value, this divided by that. Okay, so now that's my new win-to-loss ratio, which is sitting at 2.99 to 1, right? So even with a 35.6% batting average, if I got this win-to-loss ratio, I still win. Now, again, I'm going to be clear that I'm certain that a lot of these gains that we achieved here did require a drawdown of this amount, maybe more. So we can't necessarily say that we could cut off all of our trade losses at this point. But if we go through the rigor, if we go through the process of actually analyzing each of our trades and looking at how far things typically go against us before they go in our favor, which we need to do in order to figure out how to improve our results, then we can actually get to the job of knowing when to cut the losses. In other words, we need to get better with our data. We've got to do the actual homework. We have to try. If we don't try, if we just wing it and see what happens and don't take this seriously, then you'll never get funded. And even if you luck out and get funded, you're going to blow out your account so fast after you get funded that it'll be as if you never did it. So this is the part that separates the people who win and succeed from the people who lose. They look at their results, they take them seriously, and they do what the numbers tell them. They don't try to overanalyze it and pretend they have some sort of clairvoyance that allows them to figure out when they don't have to listen to what the numbers are saying. They recognize that this is the end all be all. This is what's going to make or break you. So folks, this is just an example of how much of a difference can be made if you just cut your losses sooner and learn where that cutoff point needs to be. All right, so take this advice, use this example, and then we'll go from there.